KOSPI 630.07, foreign liquidity diverged. So here's the bottom line right up front. The huge KOSPI surge you saw today, it's masking a massive 2.1 trillion won exit by institutions. This isn't random. It's a proxy hedge, and it's pre-positioning a wall of supply right before the U.S. tech market opens. Now, the headline screamed pure risk on, didn't it? A plus 3.67% jump on the KOSPI, closing way up at 6,307. I mean, that's the obvious knee-jerk reaction to the big Nvidia catalyst. And yeah, it pulled retail money in like a magnet. But underneath that beautiful green candle, something else was happening. A tectonic shift. Foreign institutions were hitting the sell button, executing a record net sell-off of 2.1 trillion Korean won. That's not just a little profit-taking, folks. That is a structural, full-scale withdrawal of capital. Okay, let's just lay it out side by side. On your left, a beautiful, record-breaking rally. On your right, a record-breaking exit of foreign cash. This massive gap between price and flow, that is the core anomaly. And figuring out what it means before the U.S. Open is the only thing that matters tonight. Look, this isn't as simple as taking profits. We are looking at a textbook case of proxy hedging. It's a really sophisticated risk management play. What institutions do is they use a liquid, highly correlated market, in this case Korea, as a sort of buffer. It lets them pre-position and manage risk for their U.S. portfolios while Wall Street is still asleep. So, how'd they pull it off? It's a four-step sequence. First, they harvest liquidity, basically turning their hot Korean tech stocks into cold, hard cash. Step 2, they rebalance to delta neutral, getting their portfolio risk back to zero after that Nvidia pop skewed their exposure. 3, they reallocate that capital up the value chain. And 4, they use all that retail-driven hype as the perfect cover to unload their inventory. And if you take away just one thing, let it be this quote. This really distills the entire capital rotation we just saw. They sold the hardware manufacturers in Asia to get ready for the system designers in the US. So here's the most crucial point. That 2.1 trillion won didn't just disappear. No, it's been converted into cash. It's now potential supply, just coiled like a spring, waiting to either be deployed or to act as a massive wall of resistance the second the US market opens. This is the fundamental conflict right here. You've got retail chasing the headline, buying the Nvidia hype for all it's worth. And at the exact same time, you have institutional money executing a deep structural rebalancing, selling right into that strength to manage their global risk. It's two completely different games being played on the exact same field. All right, which brings us to the break point. The entire thesis, all of this analysis, it all pivots on one single, absolutely critical price level that's going to get tested tonight. And that number is 25,307 on the NASDAQ 100 futures. That is the line in the sand. Everything depends on this level. It's what will either validate this whole proxy hedge signal from Korea or completely invalidate it. Okay, briefing time. Invalidate the headline. Trade the supply chain. Here's the play. For NASDAQ 100 futures, your entry is above 25,307 with a target of 25,391. If it breaks below that level, all longs are invalidated. For the SOX index, you hold the AI leaders as long as we're above 8,450. Below that, you exit all manufacturing exposure. All right, your final checklist. First command, watch the pre-market volume on the NASDAQ 100 futures. That's your first confirmation signal. Second command, confirm signal alignment. We only take action if volume confirms the price action around our 25,307 pivot. No confirmation, no trade. It's that simple. Third command, invalidate on contradiction. If the price and volume data starts to fight our thesis, the entire plan is void. Cash becomes the only correct strategic position. We log the result at 0630 EST, no exceptions. If you want the edge from the Asia close before New York opens, you subscribe. Be here.